Today we had a serious rally in energy stocks, and we love to see this. Last week we talked about how we shouldn't be selling these names just yet, and we're thankful we haven't sold them yet. Why do we not believe we should sell them yet? Well, the price per barrel is higher than it was when many of these stocks peaked. Yet there's been a massive 20 to 30% sell-off that fundamentally should never have occurred. Now we're seeing an energy crisis, international energy crisis, the proportions of which are far greater than I expected. There was clear signs that there was a supply imbalance, and we had seen fundamental structural factors that were the clear indication that there would be increase in demand. And that was one, the flight to the suburbs, lots of purchases of new cars, and just general expansion and growth of the world and the economies internationally. And yes, I understand COVID has thrown a monkey wrench into things, but the US is the largest energy consumer, largest economy in the world. We've seen a massive, broadening out of cities, expansion of suburbs, etc. And we've seen a massive purchase of new cars. So put two and two together, people are going to be driving more. There's going to be more demand for oil and gas. We've also taken a look at the long-term arguments against energy and refuted those. You can go back to past videos. Feel free to ask questions down below. Today we're going to talk about today and going forward. Well, for the first time in this slump and then recovery, I feel like it's becoming consensus that energy is a good place to put your money. It's been hated on for the last several weeks. People have been very hesitant to get in. We've obviously seen hedge funds, college endowments, etc. decide to divest. There's been this whole, non-scientific divest movement away from achieving good returns and towards, achieving social values. And that has led investors to not be correctly weighted in this industry and in this sector. However, the sector is definitely doing very well. Many companies in this sector have chosen to increase dividends, and they've taken a stance accommodative to shareholders where they're going to look to provide shareholders more cash. And in a world where rates look to be rising, not going back down, I don't think they're going to be going back down. Yes, there's this whole, weaker dollar, inflation scare type thing. But in a rising rate world, those cash dividends are going to become more attractive. They're going to look very good to investors. In addition, energy stocks get more buyers when rates are going up, which looks like they are. Look at rates. Looks like they're going up now, as they should. 1.4% in an economy that's growing 5 or 6%, according to Rick Santelli, is not market appropriate. And if you ask me, I agree, especially since the rate of inflation is much higher than 1.4%. That's because of the Fed. The Fed is taking their foot off the gas. We can see since that announcement, rates have moved quite substantially relative to the low rate they've been. So, rates rise. Why does that affect the market? Well, what do rates present? They present a return on investment. And it's a longer term return on investment. We're talking the 10, 20, and 30-year treasuries here. What do those compete with? Well, sure, we expect energy stocks to be around and be making good money for the next 10, 20, possibly 30 years. Too hard to look into that. We know renewables are coming. We know that they are working on better renewables, allegedly better. That's up for debate. But there's a lot of unknowns there. So energy stocks, we'll say they're more shorter term versus 10, 20, 30. That is more long term. And 10, 20, 30, well, who does that compete with in terms of returns? Well, long-term returns. What else is long-term returns? Tech stocks. Tech stocks people buy as long-term return companies. They've done very well when rates have been low because there hasn't been as much competition for the long-term capital, the people who want 10, 20, and 30-year returns. However, we can see today rates are going up. Mega cap tech is down. Okay? That might be a short-term thing. Who knows? Time will tell. But I don't like mega cap tech. Okay? Look at Microsoft. I don't feel like I have an edge in Microsoft. Obviously, it's a great company, produces very important, good products. I know some very prominent software developers and cybersecurity people at Microsoft. They're great people. They're doing great work. They're fighting governments. But the stock is at 37 times earnings with a less than 1% dividend. And the CFO recently sold $17 million worth of stock. And it's done nothing but go up. It's ridiculously expensive, you know? So I'm short Microsoft. Obviously, we closed the Apple position last Monday, but I am short Microsoft, and I might be wrong on that. So it's not a massive position. It's not like got half my portfolio short Microsoft. Rah, rah, we're going to take them down because it's Microsoft. You know, it's Microsoft. Relax, okay? It's Microsoft. But it's an expensive stock, and it's time might be due for a little bit of a correction. I can see a correction in mega cap tech. I'm not playing the market direction here, though. You know, we're at a level that's very high. It's very high. And there are areas of the market that aren't very high. So, and, you know, even if they were very high, if, you know, they're still putting this kind of cash flow to price type situation, I'll still be buying if they're high. However, they happen to be low. So, I'll just buy them low. Now, this other stuff, it's high, and it's price to cash flow, rising rates, So we'll let that stuff come down, toss it to the side, get this stuff. Hopefully it does well because short-term cash flows automatically all of a sudden become more attractive. So we'll see what happens. I'm not selling energy yet. I don't think it's a good idea, but it could be. Who knows? You know, we'll see what happens. I'm not doing it though. I'm sticking. Haven't sold anything except personal. I haven't sold anything for clients. Only personal to like pay rent and stuff like that. So we'll see what happens. Until next time, peace out.